I'm Motley Fool Canada senior analyst Nick Sciple, and this is the 5 Minute Major, here to make you a smarter investor in about 5 minutes. Today, we're talking about the biggest questions ahead for the stock market in 2024, and my guest is Motley Fool Canada Chief Investment Officer Iain Butler. Iain, thanks for joining me.
Excited to be here, Nick. And let's get right to it. Clock is ticking.
Yeah, let's do it. Iain, as we stand here at the beginning of 2024, what are your three biggest questions for Canadian investors looking toward the year ahead?
For sure. So Canadian investors, and with that in mind, I'm going to focus on the Canadian market and what's maybe ahead for the Canadian market in the year ahead. And I think the first question that I have in my mind anyway is how is the Canadian housing situation going to evolve? I think we've got a pretty severe housing shortage in this country. There's a very severe affordability issue with Canadian housing. And we've had an interest rate environment that is not conducive at all to the $251 billion worth of mortgages that are set to come due in 2024. So it's expected that monthly mortgage payments, could increase for people from anywhere from 25% all the way up to 54%. And I don't know about you, Nick, but that's a hit to the budget, the old monthly budget. So the direct impact that I think housing has on the Canadian stock market is through the Canadian banks. They carry very heavy weightings in the S&P TSX Composite, and their performance tends to dictate where that index goes from year to year. But a slightly less direct impact is just on overall consumer spending here in Canada. So I think it's going to be fascinating to see where we are. And I'll circle back on that in a later part. So question two, okay, we're gonna speed this along because that clock. Capital markets at some point are going to. So the question is, when are capital markets going to wake up to how significantly underinvested the resource sector has been over the past decade? We need commodities, copper, nickel, plethora of others, to drive the electrification of everything that's expected to occur over the next decade. And there just has not been the appropriate investment to mine those resources. So I think that's going to be something we have a close eye on as well. And thirdly, how is the U.S. stock market going to perform? I think we are Canadian investors. Throughout our services, we offer both Canadian and U.S. Stock recommendations, and it's undeniable that the Canadian market is influenced by the U.S. stock market. Just look at how the Canadian market performs on a U.S. holiday when the Canadian market is open. There's no volume, nobody cares, nobody does anything. So U.S. stock market matters. U.S. stock market is very much driven by the technology sector, which is not something that we have here in the Canadian market necessarily. And I think that's another dynamic that we can consider here. There's huge companies in the S&P 500 technology sector that really, just like the Canadian banks, they dictate how the S&P 500 performs. And if technology continues to capture investors' imagination, the Canadian market's probably going to lag the U.S. again over the course of the year. But that's what's on my mind.
Hey, Iain, so we talk about questions about the real estate market, what could happen with commodities, oil and gas, and the big question of what's going to happen in the U.S. Investing market. With those questions in mind, Iain, what actions have you taken in your portfolio to prepare yourself for these questions that are lingering ahead in 2024?
Totally. So personally, and I think, and again, I think my personal portfolio is certainly influenced by our members only services here at the Motley Fool. So personally, in my portfolio, I've actually been buying Canadian banks or adding to Canadian bank exposure. They are cheap. Everybody knows that this mortgage situation is happening. It's very well known that Canadian housing isn't right, and I think that's exactly how the banks are priced. The banks know what they're doing, though. They're great businesses, and they tend to be able to navigate these situations adequately. And I think there's an attractive setup there. So Canadian banks are attractive because of the question marks that are hanging over them. Same goes for resources. It's not been a fun decade for resource-oriented investors, and that's going to change at some point. It's a cyclical industry, and there's no getting around that. We've dragged through the bottom, and there's a rebound out there. So resource companies, I think, are attractive too. And I think technology, at some point, the run's going to end there. There's some big multiples in technology land, and multiple contraction hurts. So we'll see how that plays out.
All right on time. That's it for us for this edition of the 5 Minute Major. Thank you so much for joining us, and we'll see you next time.